The burning question on everyone's mind is whether we can still retire from Tesla stock as the stock price continues to plummet. With the world seemingly in turmoil, doubts start creeping in. Can we rely on Tesla to turn things around? If so, how many shares do we need at the current dirt cheap prices? The silver lining here is that accumulating more shares becomes easier when the price is lower, offering greater value in the long run. Let's dive into these uncertainties and consult the updated charts. If you're already on board, grab some popcorn. If you haven't subscribed yet, now's the time. Let's uncover what it takes to retire comfortably and passively by 2030. The downward spiral of Tesla stock seems never-ending, and it's hard to catch a break. But amidst the chaos, let's take a moment to appreciate these low prices. Despite short-term volatility, many of us are in it for the long haul, eyeing that sweet retirement in 2030. To retire very comfortably by then, we need a passive monthly income of $6,000, which adds up to $72,000 annually. This calculation factors in a 5% inflation rate per year from 2022 to 2030. While some might argue the inflation rate could be lower, sticking to this conservative estimate seems prudent. To generate this income, we would require a 7% return on a $1 million investment. The big question is, what will give us a 7% return by 2030? While some might consider holding Tesla and drawing from it, we can't be entirely certain about its future returns. On the other hand, the S&P 500 has historically averaged around a 10.5% annual return over the past century. To be on the safe side, let's assume a 7% return, acknowledging that market fluctuations can't be predicted with absolute certainty. Selling Tesla stock might not be your first choice, especially considering its potential for higher returns. However, we need to weigh the data we have. Tesla's been around for about 15 to 17 years, which is impressive. Still, when it comes to long-term reliability, the 100-year history of the S&P 500 provides a more stable foundation. To retire comfortably by 2030, this plan should sustain you for a good 40 to 45 years, which is quite a journey ahead. Now, let's examine different scenarios. In the ultra-bear case, we're looking at 10 million vehicles sold by 2030, with an average selling price of $40,000. Gary Black predicts $48,000, but we're being more conservative. This would result in vehicle revenue of $400 billion and an operating margin of 20%, leading to $80 billion in profits. As for energy, we're estimating revenue close to $28 billion, assuming a 20% compound annual growth rate, CAGR, starting from 2022, with a 20% operating margin. That translates to over $5.5 billion in profits. Services are another crucial component. I believe services will become a significant contributor to Tesla's revenue and profits. Looking at Q1 2020 earnings, services have been growing nicely and generating a profit. Assigning a 20% operating margin would yield nearly $8 billion in service profits. Overall, this scenario suggests a total revenue of $466 billion, an income of $93 billion, and 3.25 billion shares outstanding, factoring in a share buyback to prevent dilution. Moving on to the bear case, we're looking at 15 million vehicles sold, with an average selling price of $35,000. Energy revenue is projected to reach $60 billion, assuming a 25% CAGR. Services maintaining a 20% operating margin would generate around $8 billion in profits. In total, this case forecasts revenue exceeding $600 billion, an income of almost $124 billion, and an earnings per share, EPS, of over $38. In the base case, we're assuming 20 million vehicles sold. While I have my doubts, Tesla might just pull it off. The average selling price would be $30,000, and energy revenue would grow at a 30% CAGR, reaching $47 billion. Service revenue is estimated at $77 billion. This case predicts total revenue exceeding $700 billion, net income approaching $145 billion, and an EPS nearing $46. The bull case anticipates 23 million vehicles sold annually, with an average selling price of $28,000. Energy revenue would grow at a 35% CAGR, reaching $62 billion, and service revenue would climb to almost $88 billion. This leads to total revenue approaching $800 billion, net income exceeding $150 billion, and an EPS of $48. Finally, in the Ultra Bull case, we're talking about 25 million vehicles sold, with an average selling price of $26,000. Energy revenue would skyrocket to $80 billion, growing at an astounding 40% annually. Services would generate over $100 billion in revenue. This scenario forecasts total revenue surpassing $800 billion, a net income of $176 billion, and an EPS of over $51. Now, let's explore Tesla stock prices in 2030 across these scenarios, ranging from the pessimistic ultra-bear case to the optimistic ultra-bull scenario. The ultra-bear case assumes a price-to-earnings P/E ratio of 25, while the ultra-bull scenario is based on a P/E ratio of 15. In the ultra-bear case, the stock price could reach $718 per share, resulting in a market capitalization exceeding $2.3 trillion. Moving up, the base case predicts a stock price of over $1,100 per share, with a market cap exceeding $3.6 trillion. The bull case envisions Tesla stocks soaring above $1,200 per share, with a market cap approaching $3.9 trillion. In the ultra-bull scenario, the stock price may reach almost $1,300 per share, propelling the market cap to nearly $4.2 trillion. Let's calculate the number of shares needed to achieve financial freedom by 2030. This analysis is based on Tesla's current stock price of around $150 per share, though fluctuations may affect the total value. In the ultra-bear case, you would need approximately 1,393 shares, or a dollar value of $210,000, to reach $1 million by 2030. Moving to the bear case, 1,048 shares, or $157,000 would suffice, representing a $50,000 reduction compared to the ultra-bear case. The base case requires 892 shares, or a dollar value exceeding $133,000. The bull case demands 774 shares, or a dollar value exceeding $116,000. Finally, in the ultra-bull scenario, a mere 726 shares, or about $108,900 would be enough to achieve the $1 million milestone. Each case has its requirements and potential outcomes. The ultra-bear case may seem daunting, but it's not impossible to achieve success with commitment and discipline. The base case represents a more feasible option, while the bull and ultra-bull cases promise substantial returns. Investing such a large sum all at once may not be feasible for everyone. This is where dollar-cost averaging comes into play. By investing smaller amounts consistently over time, you can mitigate risks associated with market fluctuations. Tesla stock presents a remarkable opportunity, often considered the greatest investment opportunity of our lifetime. While the financial requirements might seem daunting, exploring different scenarios shows the possibilities. In conclusion, retiring comfortably with Tesla stock by 2030 is entirely possible. This isn't just one person's opinion. Long-term investors, even those who've turned bearish, acknowledge Tesla's promising future. Once full self-driving, FSD, is resolved, the market will likely shift in Tesla's favor. They've faced similar doubts before and proven skeptics wrong. FSD is expected to follow the same trajectory, revolutionizing the market. Thank you for joining this journey. Let's continue building our understanding, staying informed as we navigate Tesla's potential together.